begin in the United States with a new report from Comerico Partners, 150 pages of hard, in-depth work on the global economy. I enjoyed reading this over the weekend. That's the 2025 macroeconomic outlook, looking forward to the future. Let's start with U.S. sales. We're going to focus on the United States, China, and Nigeria from this report. Retail sales from Friday dropping to a two-year low. There we go. January, 0.9% contraction. The forecast was a 0.4% contraction. December was actually revised upwards from 0.2% to 0.7%. Let's bring in Dr. Ubah Jeremiah. He's the head of investment research at Comerico Partners Limited. Dr. Ubah Jeremiah, you're very welcome. Good morning to you. Thanks for joining us.
Thank you for having me.
So let's start with the retail sales we got from the U.S. What was your reaction to those numbers from the United States?
Well, it was definitely came as a surprise. Like you said, this was far above the estimates that analysts predicted. And the drop of 0.9% shows that United States is going to have some tests to check whether their resilience is going to continue.
Now, you have a chart from your report showing the correlation between consumption in the United States and economic growth. Talk to us about that correlation, about this consumption-driven economy. I mean, the correlation is almost perfect. As I'm looking at the chart right there, GDP in, what is that, blue? And then you've got the consumption expenditure in purple or lavender. Talk to us about
so that. What we have noticed that from the data, as you can see, a near perfect correlation is that the consumption expenditure actually drives economic growth rather than personal income, given that this consumption expenditure is primarily credit-driven. So if we move into a less hawkish environment, we might probably see an uptick in GDP as the data shows. But most analysts from consensus and the tariffs plan, nobody is looking at a rate cut for the next 6 months.
I'm with you on that. I think Bank of America said zero, nothing for the entire year. All right, now inflation, of course, impacts consumption because of what it does with respect to the movement of prices, right? We also got CPI and PPI data from the U.S. It looks like CPI is pretty sticky. Yeah, so what? January headline year on year, 3% above estimates of 2.9. On a month-on-month basis, 0.5. Estimates of 0.3. This, of course, in the U.S. And if we flip the coin and look at the producer price index, that is the producer side of the coin, we also saw an increase there. So year on year, 3.5, forecast 3.2. What do you make? I think month on month was the same story. What do you make of the inflation data coming out of America?
Yeah, so we see inflation inching up massively, especially core PCI inching up to 0.4%, right? So one thing we have noticed is that even our outlook shows that we are going to face additional inflationary pressures. And we see geopolitical tensions pushing up to that. We see China prepping, we see Canada and Mexico prepping and making negotiations around tariffs and every other thing. So the forward guidance for what is going to happen primarily centered on who won the election. And given that Donald Trump has won the election, there is some house cleaning that has taken place.
Yes, a lot of house cleaning. It's causing controversy. Credit and consumption. I'll go back to another chart. I think you mentioned it when we were talking the first time, because I think there was a report that U.S. credit card debt has now reached 1.2 trillion or so. But this is so important, and because I had a guest on Friday talking about mortgages. MOFI, Ministry of Finance Incorporated, has this new, I think it's a 100 billion fund to try to boost mortgages in Nigeria. The importance of consumer credit. Can you talk about how that has been a driver of consumption in the U.S. as we're looking at this chart here?
So unlike the United States economy is unlike our economy because of the availability of credit.
Yeah.
So personal consumption can have a buffer if personal income doesn't meet due to this availability of credit. Yeah. We see them use credit cards, and the easier and cheaper credit availability is, we see growth in the economy. And now, talking about growth in the economy, we're still going to talk about China, but we see how sometimes we get into a position where you can't move credits either ways, or even enter in what we call a liquidity trap, where you now have to look for more nuanced ideas in order to push growth or push the economy upwards. Yeah. China is facing that challenge, and as you see, they are trying to maintain their rates, but they're looking for other ways, like asking individuals to release like 3 of their devices or 4 of their devices to get replaced. All these are trying to stimulate growth rather than changing the underlying macroeconomic or monetary policy tools.
Now, you mentioned China. We've talked about CPI and PPI in the US. You have a chart showing inflation in China, which has been on the decelerating trend. What's the story here with what China is facing as far as the inflationary environment? So
yes, we saw China's inflation print around 0.5%, but the previous inflation was around 0.1%. So looking at those 2 data points, you might look at it as an increase, but on a year-on-year basis, we are coming from a negative 0.1%. So there's a natural uplift, and seeing it at 0.5% is actually alarming. So what we know is that for an economy to grow, we need a healthy inflation of around 2%. So having inflation ranging less than 1% is not good for an expansive economy. The only reason why you buy is because you think that tomorrow there's somebody that is going to be willing to sell. If you don't have that factor or that theory ingrained in your mind, and that theory is well flourished under a 2% inflation kind of tenure. And since China is facing a deflationary pressure, they're looking for other ways, like I mentioned, looking at stimulating not only individuals but also companies. So companies with old machines can trade it back at a discount. So all these are measures of boosting the economy without actually changing the underlying monetary policy rate, because changing the underlying monetary policy rate has implications to their currency. And China opened against the US dollar the lowest, I think, in the whole year.
Yeah, because of there's also the tariff threat and so on. Exactly. Now, you've got another chart on the loan prime rate, one of which I think impacts households, the other which impacts corporations. And if the loan prime rate is coming down while inflation is also trending downwards, isn't there an impact there with respect to China?
Exactly. That's why the People Bank of China came out in their last report to say they are going to maintain their loan prime rate at where it is steady without looking for reducing it or moving it, and looking at increasing their long-term bonds in order to facilitate other special purpose type of government expenditure.
Yeah. Now, let's get to Nigeria now. So, look, again, we could spend a whole hour just on the U.S. portion of your reports, or even on China. It's really in-depth. But the big talk, of course, is the budgets being increased to 54.9 trillion. What's your read on the increases that you've seen in Nigeria's budget?
Okay, so the catalyst for the increase was finding 4.5 trillion across other government agencies, including the custom. But what is peculiar is the recurrent or the debt servicing and the capital expenditure in relation to the recurrent expenditure. If there's one thing to zoom in, or Nigeria can mimic from the US, is the DOGE, the government efficiency. Yeah. I think if we have a DOGE committee looking into this budget, I think we can find some stories that will trend on our eyes.
Also, the Bureau of Statistics is rebasing the inflation basket for CPI, Consumer Price Index, also the GDP, Gross Domestic Product. What's your outlook on how this could impact things for the nation in terms of how we review our economic metrics?
Well, the last time we had this exercise, we tagged the biggest economy in Africa, right? And my outlook for this exercise is that we are going to see a significant uptick in GDP and a significant reduction in inflation. Our base case estimates puts it around 20%. Now, this is because the choice of the rebase year of 2024 is the highest compared to a 20 or 30 year span. Now, if you're picking the highest inflation rate to make this basket of inflation basket in order to compare, anything compared to this basket will be infinitesimal. So we will see the inflation numbers trend downwards, and we understand that there is information in data. If you're choosing a rebase year in 2024, remember that we had more or less like a unification of the exchange rates, and we had a devaluation from 400 to 1,500. So we will find this trickling down of data into prices lost by keeping the CPI base year at 2024. But it will still give us some forward guidance on what is going to go forward. So,
speaking of forward guidance, let's look forward to the end of this week. We had our what to watch, and Friday culminates with the Central Bank of Nigeria's Monetary Policy Committee, 19th and the 20th, Thursday and Friday. What are you expecting out from the MPC?
Well, the consensus expectation is for the MPC to hold rates, but given our outlook on inflation and our projections, it will not be surprising if the MPC tends to be dovish.
Yeah. Dr. Ubah, thank you so much, Head of Research at Comerico Partners. Again,
thank you for
having me. I
having
encourage everyone to look into it. But real quick, how much work went into putting this report?
A lot of work.
A lot of work. I can imagine. Thank you so much. Really appreciate your insight.
Thank you for having me.
All right, you're watching.